Okay, section 4-3 is short and sweet. There's just two things that we need to know. The first one is proving cash, meaning that we keep a balance in our ledger of the cash account because there's so many cash transactions that we keep a balance so that we can prove that cash in our ledger, the balance is the same as, or that it agrees with the balance of cash that we have. And so on the check stubs that we'll look into a little bit more next chapter, on the check stubs it has the balance that we bring forward, meaning after we write a check we figure out the balance, and then on the next check we bring that balance forward, and that should be the cash that we have on hand, and it should agree with the cash in the ledger, okay, the balance of cash that we have. So that's proving cash. The next thing we need to know is this right here, and it is correcting entries. So if we make an error on an entry, say we debit something that should be credited, or we credit something that should be debited, we need to go back and make that correction because our balance is going to be way off. So if we get the instructions up here, right here on November 1st, we're going to do two correcting entries here, both on November 1st. We discovered that a transaction for supplies bought last month was journalized and posted in error as a debit to prepaid insurance instead of supplies for $60. So we looks like we credited prepaid insurance. We debited prepaid insurance, and which means we need to go and switch it around to correct that entry. So we need to credit prepaid insurance. We debited it, now we need to credit it to get to kind of back that out and make the correction. So if we are crediting prepaid insurance, we need to put it on the second line. We know this is November 1st, but we are going to put it down on the credit, so let's figure out what we need to debit. We need to credit prepaid insurance instead of supplies, and so supplies is going to be now debited because it looks like we credited it previously. So supplies, the memorandum is our 15. Source document, because when we make a correcting entry we just write out a memorandum that says this is what we did to correct it, this is the mistake that we made, and we'll debit that for $60. Okay, so the next one, since we debited it, we need to credit it now to back that out. So prepaid insurance, going to credit it $60, and that's the correcting entry. Since we debited it in error, we need to credit it to back it out and then put the proper debit to supplies, since we did it to prepaid instead of supplies last time. Okay, next one is similar. Discovered that a transaction for rent expense last month was journalized and posted in error as a debit to repair expense. So we debited repair expense in an error, and we should have done it to rent expense. So if we debited repair expense, we need to credit it to back that out and redo our mistake, or undo our mistake. So credit repair expense would be second on the list over here on the journal. So we need to debit rent expense. It's also on the first. And the memorandum is the next one, 16. We write up a memorandum telling what happened for $550. And instead we need to, so now we need to back out the repair expense and credit it. That way we correct our two errors that we made. Pretty easy, we just need to figure out what we did and do the opposite the next time,